Move on to Tiger Brands then, a company that was actually looking to buy out AVI at one stage, but let's take a look at some of the earnings updates on it. They in February said that expected headline earnings per share were expected to be satisfactory. Growth there was ending in terms of the earnings results would have ended at in September, on the September the 30th, and earnings were expected to be pretty strong for the period. The company added that the trading environment does continue to be characterized by a slow recovery of consumer spending, of course, in the domestic market, and rising cost inflation. Tiger Brands interim results are expected out on the 21st of May. So as I said, Tiger Brands was looking to actually buy out AVI back in 2008 with a share offer of 24 Rand. As I said, AVI's share price is sitting at 46 Rand, but Tiger Brands, how would you compare it against an AVI?
Chalk and cheese. This is a big commodity type food company. It has a few niche products in similar areas to AVI, and it's got a fishing operation in there as well. But by no stretch of the imagination can you really compare these two things. AVI is a very, very niche operation with a limited range of products and some very interesting products, as Paul mentioned earlier, whereas this thing covers the entire range of food products. And the great variety of them are relatively low margin commodity type products. And, you know, I must admit, I find it difficult to get awfully enthusiastic or excited about these companies. Great company, extremely well run, but yeah, I don't want to preempt what you're going to ask me about whether I think it's hot or cold.
Okay, so before we get into that, because it's sounding pretty bearish right now, but Africa is something that you have to take notice of when you evaluate Tiger Brands. Paul, your views on how Tiger Brands is doing in Africa?
Yeah, so we're talking now Africa outside of South Africa. South Africa is still part of Africa.
That's a very good point that you
I'm actually very pleased that you're not so keen on this one, Chris, because I actually prefer it of the two. Because I think they've actually grasped the idea that they need to become an African food conglomerate in a much more real way than the guys at AVI. So AVI's guys are happy to shunt the product in brown boxes into Whitey Basson's ShopRite, you know, container that's heading for Lusaka. Whereas Tiger put a guy on the ground to go and buy a business in Kenya and to go and buy a business in, you know, making chocolates in Cameroon, for goodness sakes. They bought...
But do you need to put a guy on the ground to do that? Can't you just rely on Whitey Basson doing that for you? I mean,
well,
do you need to go through the hard groundwork?
I guess it depends whether you want to be successful this year or in 10 years' time. I mean, Tiger had this global ambition before they bought a funny business in India some years ago, which was a massive disaster. They also went to South America. That didn't work out well. But they now have committed themselves to this, and I think actually in due course it's going to be the more successful strategy. But it's fraught with risk. I mean, they run the risk of buying things that don't work out well. They have to sink real capital into some of these countries, and that can be tricky in terms of currencies and other sort of operational challenges. But I think on balance, the market in the global investment context is crying out for vehicles with which to invest in a fundamental way in the growth story of the African continent. And that's why they like Massmart and they like ShopRite, but that's also, for me anyway, a reason why Tiger will get its support.
It's not just about staple foods though. Surely you also have to look at the brands that it has in its arena right now.
Oh yes, no, look, make no mistake, as I said, they've got some incredibly powerful brands across the board. And you can never diminish that brand equity. One thing, though, I think that impacts on both Tiger Brands and Pioneer and the other big commodity type food producers is that I think the pendulum is swinging much more from them towards the retailers. And I think that swing is going to be hastened by the arrival of Walmart. I think when they come in, they're really going to put intense pressure on companies like Tiger to reduce their prices and to improve their terms. So I think that's another reason why they're very keen to get into the rest of Africa, where margins are much, much higher than they are in South Africa. And I agree with Paul. I mean, look, I think that'll be great for the longer term, but you know, I think we have to emphasize that it's going to be a very, very long-term prospect.
And how do you evaluate that? That's a big question when you're looking at these African strategies, because how do you build that into an evaluation model? That's very tough.
Yeah, it's very tough, and you do have to take the view that it's going to be a long-term prospect, as I said. You know, some of these businesses have been just kind of like ticking along. They're obviously going to add a lot of value to them over time. So it makes the actual process of valuation extremely difficult.
So this is more exciting because I think we had a hot for AVI on both counts, but I think, Paul, you're going for hot on this one.
And partly it's a concession that I didn't get it entirely right, because when Nick Dennis left under a cloud with competition-related anxieties, 3 or 4 years ago, maybe now, the CEO who came in, Peter McClare, I viewed then as a bit of a journeyman CEO. He'd been at the SABC, he'd been at the Chamber of Mines, he'd been at Vodacom. So I thought, oh, well, here we go. He's a sort of professional CEO, you know, trundle him in, trundle him out. But actually, he shifted the focus. He dispensed with some of those international adventures. He focused on the continental story. And I think, you know, the market currently values them on a 17 times PE. It's a big company, but it's got the same sort of benefit of the doubt. I like these kind of secular growth stories, even though it's large. I am prepared to give it the hot rating, yeah.
Sitting with a 54% one-year return, 270 Rand, it's considered quite pricey, but would you be betting on it?
No. I'd say it's lukewarm at best. A good company, extremely well managed, I think, got great prospects for the future, but I think it will be a very long-term prospect, unfortunately.
Okay, so if you're prepared to stick it out, perhaps Paul's views on Tiger Brands will pay dividends.